Hi guys, showing out some more statistical trading. This can be kind of a hard one to do. It's gonna be pretty long, but I'll show y'all how exactly to get like A plus setups. So this is for Friday. We did one yesterday, April 25th. Just if you're going to learn how to trade, yes, there's simple ways to do it. Um, some people have that special gifts, whatever, but for me, I just like to use numbers, statistics, whatever, right? So I'm gonna go through each one of these. So first, I'm gonna show y'all what this indicator does. I didn't write this one. This is one that I'm actually borrowing from this guy. His name's DCC, right? He explains it. If you really wanted to see how it works, you can go ahead and look. So basically, it's based on open, high, low, close statistics. So it tracks this with each session, identifies usually where the highs and lows are usually formed. So to explain it simpler, using the daily candle, right? So if we look at it like this, so this is market open right here. See it lines up. And usually on bullish days, it's basically saying that on bullish days, the low of the day is on average and the median. So using both, I see both like as a range because a lot of people know that statistics, there's a huge difference between the two, right? And anyways, so it's the low, and this is where the high usually forms, so the plus, right? It really doesn't matter. Um, I'm just doing this for illustrative examples, but basically what this does is for bullish days, if we're anticipating bullish day, this gives us ranges to trade from. So our low right here, this is our high. And then for bearish days, right? So still the same open. And actually, let me fix this so you get the idea. So put it right here. It has to open right there because that's where the market um opened at, right? And this is on bearish days. So from here down, doesn't really matter where it closes. But statistically speaking, on bearish days, the high of the day is formed right around here, and the low of the day is formed right around here, right? So the idea is that we can statistically see the average point value that the upper wick usually forms on bearish days, and where we usually reverse from on the lower wick on bearish days. And for bullish days, we can statistically see, like track the averages on how far below open the lower wick we usually create on bullish days, and how far above we go the open on bearish days. I mean bullish days too, right? So this is extremely powerful. A lot of people are starting to learn more about it. It's kind of interesting. It's almost like quantitative, right? So taking a look, I'm gonna remove all these. So just off of this, I just had this for example, so we don't need this anymore. Just so you know that this is what it's tracking, the daily candle, but we're trading within the daily candle using higher time frame bias. So looking into this, I mean, this is pretty strong range day. Pre-market we bounced off of this. We could have straight up traded off of this. But who's gonna be up at 5 a.m.? I'm in Texas, so I am not. I'm gonna trade market open. So that's why that. So you could actually stack these indicators, having two of them, right? So usually I like to trade from, and this is Chicago time, Central time. I like to trade from 8:30 to 11. After 11 a.m., I'm done. Usually you get like strong trends or um very weird behavior after 11. I like to trade where institutions are trading, where there's a lot of volume, right? And we'll back to volume in a second. But if we stack these two, and just for differences, I'm gonna change the color. So manipulation will be blue, and distribution levels will be purple. And then for median levels, let's use a white, I guess. Sure, whatever. Right. So now taking a look at this. Right. So here we can see this. So this is our normal levels, right? The whole day. But if we're using just the hours that we trade, it starts at 8:30, right? So now we know where if it's a bullish session from 8:30 to 11, usually our lows formed around here and our highs formed around here. For a bear session, our highs formed around here and our lows formed around here, right? So now we have stacked probabilities. We have market open, which actually acts a lot of times you can see as a magnet, but also as a rejection point. Um, and then you also have that stacked with the upper manipulation level. So this is a high quality area to reject from, right? And then this is another concept that I'm gonna take these off. I'm explaining this concept to you. and I need to release this one. This one's already released, has a couple upvotes on TradingView, but this one does. So basically, this is how I view accumulation, manipulation, distribution. So normally you'd say people, oh, there's I'm just gonna go with the bullshit example, but y'all should get the concept. So I'm gonna draw this out. This is a higher time frame candle, right? So usually, and it's becoming more popular with ICT trading, whatever, right? But usually you'll people say, oh, um, so for a path within a higher time frame candle, so if you're trading the lower time frame but using the higher time frame bias, you usually get accumulation, manipulation, distribution, right? That's just how it looks like. So accumulation, manipulation, and your distribution phases. But I actually don't subscribe to that. And actually, if you look at, well, actually, I'm gonna show you right now statistics too. But just looking at any higher time frame candle, actually, the true path within a higher time frame candle, you actually get your manipulation first, then your distribution, and then usually a small chop towards the end. So something like this. It doesn't have to be exact. Like not every candle looks like this. Don't get me wrong. But actually, the true path is manipulation, accumulation. I mean, sorry, manipulation, distribution, and then accumulation. Like the last couple minutes is just kind of like a chop within a higher time frame candle. But the idea is still the same. So this is your accumulation phase. So usually what you'll see is on the next higher time frame candle, right? So this is your previous one. You'll see a manipulation below this accumulation range, and then a distribution upwards, right? And then another accumulation. It just repeats. So you're using the accumulation of the previous higher time frame candle last couple of minutes as the accumulation, right? And then you manipulate immediately on the next higher time candle open, the first couple of minutes, and then it distributes most of the rest of the way, maybe like 3/4 of the way to the candle, and then it finishes off with accumulation at the end of the candle, right? So now I'm gonna show you this, and I'm still working out the King Sinus indicator. It's a beta version. That's why I like kind of wonky. But basically, we see here is that this is more for me, like testing it out, right? Anyways, so market open, right? We're in a accumulation range. And actually, let me make sure this is all right. So we're using a higher time frame, 1 hour candle, which is my preferred because I only trade intraday. You want to input what this says right here, the average manipulation leg -1. So that's 2. Then you want to do the manipulation distribution minus manipulation leg, which is 6, right? And then the total bars minus distribution leg, which would be 3. So what this basically saying is that right here. So 15 minutes into the higher time frame candle, 3 bars, 3 times 5 is 15 because we're on a 5 minute. We get our first extreme, our first high or low, right? So our manipulation leg. So 15 minutes in, usually the first extreme is formed. Then right here, the 9, right? The other extreme is formed, right? And then the last 3 minutes, you usually just get inside range behavior. So it could work either way. It's just tracking both. So either the high or the form can be formed right at 15. And then the other extreme is usually formed around 45 minutes in. So first extreme, 15 minutes in, right? Or 3 bars. And then the other high or low is formed around 45 minutes in. And then you get a consolidation within those from 15 minutes to the end of the higher time frame, the hour of the candle. This works on any time frame, but we're going to be focusing on hourly. So using this, you can kind of get an idea where prices can reverse from and where it's going to stop reversing at, right? So you want to be trading usually within the distribution leg because you get a more price movement, and it's actually confirmed right here. So our distribution average is about 85 points, accumulation 65, and our manipulation is 48. But that's because sometimes, I mean, right now it just depends the market regiment. Right now we're having a strong distribution, because I mean, if you look at the daily, right? Let me remove all this so you can take a look. But we're getting uh, strong candles, lots of basically candles closing near the sorry, near like starting out, barely dipping and then ripping, right? Starting out, barely dipping and then ripping, and then creating those upper wicks. The accumulation phase is usually within these wicks. So if we were looking at it, the accumulation, we're probably gonna manipulate out of this one, right? If you see this one, we manipulate it down off of this accumulation and then distribute it up, right? You don't see this taught very often at all. It's something I've discovered. I've been trading for 4 years. I'm about 21 years older now, right? So returning back into the 1 minute. I'm sorry, we were on the 5 minute. 5 minute, right? So market opens. We were in the accumulation, distribution phase of the candle, right? So I was like, well, it's already about to form a high anyways at 8:45, 8:40, whatever, right? So what I was gonna do is I'll wait for the, in fact, we can replay it. So I don't want to be trading within this gray zone, right? Now we're in our manipulation leg. So what is this telling me right here? Telling me right here. Usually the high of this hourly candle, the 9 o'clock candle, it's formed right around 9:10, right? So I know that there is a higher probability. It's not guaranteed because sometimes you have trading hourly candles, right? But using our a framework, and this is all based on statistics too. Like I'm not just bullshitting y'all and saying this is how price action works. Like you can see, it's numbers. I did numbers. I can show you the code. In fact, here I'll show you right now. So basically, tracks where extremes are formed, um, where they're actually formed at. Oh, that's right. Drawing boxes. That's how the code is. Right. So we get our accumulation. So boom, boom, manipulation, and we expect the distribution down. Something like that, right? So at this point, I'm like, okay, well, there's a possible high here. And it's even higher probability because if you take a look here, we had this high here and we swept the high, right? Let me go ahead and make that white. Swept the high. So this is a sweep. And we haven't actually swept it yet, but we are above a previous high. This is where stops usually formed, right? And I'll get to that in a second too. But now stacking that with the fact that we just hit 5 p.m. open, I'm in Chicago time, so that'd be 4 p.m. or 6 p.m. 6 p.m. open, right? And it's stacking that with the 8:30 open manipulation leg. This is extremely high probability. But there's one more thing I gotta teach y'all. So take this off. And this is basically my idea how the market works. I've released this indicator already. So basically what this is tracking, right, is 30,000. So each day on average, NQ trades about 600,000 contracts. So 5% of 600,000 is 30,000. And I like to trade a 5% increment because you could see like different blocks. So you'll see a lot of these form really close together during market hours, right? And then overnight, it takes a lot longer to accumulate 30,000 volume. So each one of these segments from here to here, 30,000 contracts are traded. From here to here, 30,000 contracts are traded, right? So we're using volume instead of time for this concept. So 30,000 contracts, and then watch market opens instantly 30,000 contracts, right? So what these bars represent, and actually I can just take off this bar color, so just for another time, right? So take out this. What this means is that price started here in the segment and closed down here. So it means the bears won the segment and their stops are right around here because this is VWAP. A lot of you know what VWAP is. It's the institutional, basically saying that within this segment, this is the average price um, weighted by volume. So you could see that on average, volume was right around here. Uh, so basically, you could kind of estimate that there's going to be a lot of shorts around here, right? A lot of short stops. Like people went short, their stops are on average from this segment right around here. And they won the segment, so they're still in the trade, right? So boom, 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 right? You don't know if they exited or not, but we do know their stops there, so regardless, right? So look, right here, watch this, watch this. It's kind of crazy you reverse off this one. This is kind of odd, but this is why we have a whole model, right? You can't take any one of these and win. So take a look at this A plus setup, right? So we're taking out the stops, right? Using volume. This uses volume data, it's not price data. Everything else uses price time. This is the one that uses volume. So using volume, we're taking out the stops here, right around the time that we usually form the high of the 9 o'clock candle, 9:10, right at the price level that we usually form the high of a bearish session on the 8:30 session, 8:30 to 11 session, and we're hitting New York open. I mean, sorry, not New York open, market open, so 5 p.m. in Chicago time. So tell me it's a high quality trade, right? Go ahead and start short. And I usually like to, it just depends. I like to risk around 30 points on my trades, but it depends on the market behavior. I'm kind of still trying to figure out what's happening currently because we were having volatility compression after this hard market we've been trading in. We're like reading like 1,000 point ranges, whatever. Go short, right? And then take a look here. So back to 8:30 open, and we formed a liquidity level. So off of this block right here, bulls won it, right? So now we know their stops are sitting right here, right above New York, right below New York open. So it's a high probability target, right? So it's about 3-to-1 R&R, just like that, $1,800. Nothing too crazy. And if you really wanted to, right, you could have traded to this one because now we have our um, New York, I'm sorry, 5 p.m. manipulation leg down, right? Let me take all this off so you can see it, right? So we had our 5 p.m. open, and this is the low where the session's usually formed, right? And then we have our 8:30 where the low of the session is usually formed on a bullish session. So higher probability reversal. And we had a liquidity level just below it. I'm not saying we're gonna take it out. That's high probability, right? And statistically speaking, we're in the distribution leg now, and we can't expect a reversal until 9 candles in, which would be on, and we'll go ahead and mark that out. That statistically speaking, our low is 400 around 945. So we have time, right? Prices in distribution right now. Right. So we did not get there. See? So that's why I usually take this low-hanging fruit. Sometimes price does that, sometimes it does. It doesn't. It doesn't really matter. We did distribute pretty hard down. But that would have been my secondary target if I was trading multiple contracts and probably would have put my stops above entry. So what does price do? Probably takes me out break even. I bet $1,800 here to got even $1,800 trade. And we get to take a look here, taking a short here. And then if we would have gotten it, right, the liquidity level, that'd have been a solid another $3,800. But hey, it is what it is. We can't win every single one of them, right? So now that was a pretty good setup. It's getting kind of a long video, right? But I just wanted to show y'all exactly how it works and my thought processes. So I'm gonna go ahead and go to Thursday. Should give you one more example to see now I'm not cherry picking, right? So let's go ahead and go to Thursday. Set it right here. Doesn't really matter. Okay. So this is the 8:30 open. We usually get a reverse on here, and we did not. Should get a reverse on here, we did not. So this is extremely strong trend day, right? And from the 5 p.m. open, this is also a level where we get reversal from. It's kind of interesting. There's no lineup right here on this one. Uh, oh, actually, you know what? Right here, right off market open, it would have been a very lined up manipulation, right? So we'll go ahead and extend this out the rest of the session. Make it red so you can see this area we want to short from usually. And true liquidity blocks. So I'm gonna go ahead and we don't really need this for now. So let's see. We had a liquidity level above it too. So this would have been a high quality short, right? And then a statistical AMD along with the true liquidity block. So use our highs formed around here, right? But we had a liquidity level right above us. So I personally would have been kind of concerned because our high session was formed right here. And we're the distribution leg and we should have reversed downwards and we didn't. We created above the high. So we know that this is probably gonna be a trend candle. So there was no trade here, right? So just putting everything back on, it seems like a lot, but if you're gonna be trading, trying to make money, you need these levels. So we don't have any really lined up levels, I guess you could say, until maybe right here, but there's even no liquidity, right? So there's no high quality trades for me personally, but we could take a look. Honestly, yesterday I would not have traded probably. Maybe this one, there was no statistical basis for it. This is past 11 p.m. So really, what I would have done if I was like, all right, I really need to take a trade today, even though you shouldn't be trading when you shouldn't, but go ahead and go past 11 and do it to market close. So you get new levels. Let's take a look at this. Turning it on now and drawing it from the 11 a.m. candle. And that was kind of interesting, but this is a concept I learned too a long time ago when I was developing my own version of this indicator, which his version is a lot better. He's good coder. I'm still working on mine, right? But basically, if you don't get that strong manipulation down on trend days, a lot of times you'll get a push up, right? Whatever, like we did, and then returns to this, and this is actually acts as support instead of resistance that it's supposed to, and then shoots into the manipulation. whatever, right? I don't know why the fuck that did that. Um, so the manipulation high, which is right around here, which is something we shot into actually, right here, right? So taking a long off this one would have been pretty high quality, and seeing that it took out this liquidity level and that it was in a manipulation leg, this probably would have been the trade I would have taken. But that's probably late in the day, so But it's just about being patient. Did I get stopped out? No, because he's 30 point stop. So it would have been solid, right? So I know y'all get the idea now how price usually moves. Like this is just how it works using time and price and volume. You can combine all three. Get some pretty nasty trades. Like $1,200 days. It looks like a lot. I know it does, but if you want to be quantitative, right? This is where you get the money, especially in futures. Just knowing where to put your stops, knowing where to trade from, and knowing how price usually reacts. So, I mean, that's all I got, guys. I'm gonna go ahead and publish the statistical AMD indicator, and I will link both indicators in my bio in the description. And if I go ahead and subscribe and like, and I'll be able to show you some more setups. It took a lot for me to be profitable. Um, a long, long time actually, but it's how I make money. I would honestly very much push forward for y'all if you're starting out to prop firms. In fact, actually on my Discord, it's my buddy's Discord actually, but I shared it with him. So I'm gonna go ahead and pull it up right now. Right. So share screen. I'm gonna go ahead and move it to Safari. Right. So this Discord I should have kind of a small Discord. We just started in January. Um, it's $50 a month, but sometimes I'll be sending out the um free education. Um, just so I know I kind of know what I'm doing a little bit, not really. But this is kind of I do this on 19th, but this is where I think over the next year, if something breaks with the economy, it's gonna be regional banks, commercial real estate. Um, Rates are not gonna go down with Trump tariffs and stuff. So I'm expecting small bank lending to pull credit lines, stop funding small businesses because construction's hot. They all spread, not just in real estate, but in all industries related to credit, pension funds, they're gonna struggle. Bond yields should spike. The Fed can't cut rates without reigniting inflation, so they're forced to watch it collapse. And the market collapses not a single day, but a brutal drawdown, grinding down asset price across the board. Um, you'll probably see headlines like Brookfield Infrastructure, which is one of those stocks that it's infrastructure stocks. So they do like offices, roads, stuff like that. It's gonna be pretty weak. Um, Regional banks falling. But once you see all those nasty headlines, the market dropping, that's when you really should start scooping up stocks and stuff. But um, basically, I developed this parabolic moving average too. So basically tracks the cumulative, right? Because compounding works, right? Nature of the market. You can see where we're at right now. We're probably back above this line already. But since 2008, we've been pretty solid above it. And it was a very good. I scooped up some video around like $97. Not a great entry, but I don't think it's time yet. I think we're gonna get a small bounce and then another drop, but that's for another time. Right now, I'm not really good for predicting longer term, right? So I'm gonna go ahead and show y'all what I was thinking. Um, so this was February 20th, but a minute's the long-term update. So you can see I've been using these liquidity levels too since back then. So basically what I was expecting was us to drop, and that's exactly what happened actually. If we got above all-time highs, my bear thesis was going to end. But just looking at all these trend lines, all this liquidity, what it's looking like, this is a fake. One last push, fake was very obvious to me. It got these liquidity levels, September 16th lows. So here we go. So just like I predicted, but even harder than I thought, right? And we created this trend line now, and this trend line, and this trend line. So I was expecting this the highest probability rejection before we push even lower. And this was on the 23rd of March. And we got to that level, rejected already. This is the one I was talking about where we retest it. And he immediately dropped down to this trend line, right? And I was expecting looks like the macro conditions. I can see bearish scenario playing out. And in fact, we actually dropped all the way down here instead of bouncing at all like this before. Was not expecting that because price doesn't usually take a straight line. Um, but this was a trend line, right? And we kind of bounced off of it. And then we lost the line, closed below it. This was on my bad. This was on the March, April 2nd. And here we go. So once we lost that line, we absolutely died. Uh, it was pretty bad, right? So we took April's lows, liquidity, and we barely bounced on this trend line, which was which one was it? This was from the 2022 high to I think it was like the 2023 retracement on August of 2023, I believe. And it formed and we bounced right off of it. And so I was like, okay, just shop around on anything, but expect a range. That's what we did if we go on the daily. Sorry, daily. Okay. So once we took that bounce right, we started chopping, and now we're starting to break out a little bit. We're at the upper part of the range. If you really want my macro look, this is kind of turning into a long video, but might as well just do it now since show you. So true liquidity levels, tear off the bar color. And usually what the bar color does, just so you know, it shows me the nearest liquidity level. So if it's a bullish sell side liquidity, it's gonna shoot up to it, take it. If it's bearish, it's most likely to take it down. But that's not important right now. So I'm gonna turn off reset futures open to use daily candles. I told y'all the average volume is about 600,000 contracts, and I like to use about a 6 million because it's about 10 days every liquidity block. So this is like 10 days of volume on average, usually. Sometimes you get faster volumes, like faster segments. It's about 6 million contracts. So we bounced on, we actually took a liquidity level, took that liquidity level. And this one, we took it immediately. So my guess, honestly, we're at 50% right now. My guess is that we're gonna keep pushing, and then once this liquidity level from this segment is formed, I don't know where it's gonna be at exactly. Right now, it's right here. It's gonna be tracked by VWAP, so my guess probably be right here. We'll get a retracement, bounce, and bounce here, and then retrace all the way down. Probably take out all this liquidity right here, and market bottom will probably be 13,000, just below May 23 levels. That's just me. I could be wrong. We could even take out this one and leave this whole gap. Took out everything, all our price from 2023, but it's been a long video. And yeah, I mean, just the way market works, in my opinion, follows patterns, takes liquidity. That's what it's driven by. Yeah. Uh, honestly, I don't really care if y'all like and subscribe. I just think this is kind of a cool way to trade, especially like if you're not really have a quantitative background. I have my finance degree, but it's just regular finance. I work in financial crimes, but yeah, I appreciate any help y'all give me, any feedback and all that. But until next time.